Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 212 for Monday, 26th of January, 2026. Hope you're all well. Hope you've had a good weekend. Hope you're not too struggling too much after if you had an enjoyable Burns night supper last night. Some of us did, and it was combined with also basically enjoying the United win yesterday and also Liverpool losing. So it's the simple pleasures in life. But anyway, we had a an eventful week last week in markets. It looks like we're going to have another busy, eventful one in this week. So there's plenty for us to go through. So let's crack on. As always, you are very welcome here. Just remember that you are always responsible for your own trading and investing decisions. Also, if you want a little bit more help and support, you can join the Q1 Dollar Edge FX swing trading mentorship. Okay, that starts next week into February, where we'll for the 8 weeks of the remainder of Q1, we will look at basically running a guided mentorship about swing trading FX markets, utilizing the kind of 4 hour charts and above. If you've got questions, you can ping me, or you can just look at that QR code or that bit.ly code, and that will give you more insight. Okay, so hopefully you can see the chart and still hear my voice. Okay, so I've got a few charts of interest in here. As I said, there's quite a few elements going on in terms of the earnings. So let's start with Meta. This is a weekly chart of Meta. All right, what's it telling us? Why are we interested? Well, listen, let's bring up the old drawing tool. It has, like most of those Mag 7 tech companies, okay, been on a fantastic run. But we've started to get curious last sort of, the last 6 months or so, invariably we were sort of hitting the kind of earlier highs from sort of end of 24 into 25. We then put in a really nice weekly sort of double top there. And then we started to kind of sort of fall our way down. All right, okay, what we saw was, support turning into resistance, etc. And we fell our way back down, big round number to $600. And then invariably what we looked at was we pushed back up. And the 50 and the 20, which had acted as good dynamic support on the way up, was starting to flip, all right, and starting to act as resistance. And certainly over the last few weeks, what we did was we dropped down again to, and clearly kind of $600 is a significant big round number there. Last week we had quite some week there, okay, and invariably we kind of bounced up there, but where are we? We're into that kind of 50, into that sort of 20 there. They're releasing Wednesday after the close. Listen, the kind of my generation, I always think of Facebook, but things have changed quite considerably, and I would say in many ways, Meta is kind of almost like a proxy for sentiment with regards to AI, and in particular, how to monetize AI. So it's not just social media, it's not just Facebook. Okay, so I would suggest that any kind of slowdown in ad momentum or any kind of questions about the return on investment on AI, that is what's going to move the stock quickly. So invariably, people are going to be keen as mustard to hear what they've got to say on Wednesday in terms of both those elements, in terms of in terms of ads, in terms of return on investment and AOI, and also just talking about what I personally think is a little bit of a fad, namely sort of them trying to push basically a Meta onto wearing on your Ray-Ban sunglasses. Personally, I think it's a bit of a fad, but others may differ with that. But certainly, good numbers. Well, it has to get above that weekly 50 and 20, all right, back up towards 700. That's bullish. And then you're really looking at, does it have enough what it takes to get back to those recent highs? Poor numbers, overall sentiment weak, and well, 600 I think definitely becomes that level. And if we crack that, well, then invariably you're looking down to those sort of Trump tariff tantrum lows around $500. So it's going to be a good week for Meta in terms of you'll want to add that to your watch list.